Hi everyone, and welcome to this quick video. I want to talk about something that is so important in the investment industry, and yet it is ignored, it is underrated, it's misunderstood, and yet it is so important for so many reasons. And this is one of those things that it makes a huge difference in the long run. And it's not, and I'm not just talking about your pocketbook either. I'm not talking about your investment account either. It makes a huge difference in that, absolutely, 100%. But it also makes a difference in your peace of mind. This is something that will give you not only peace of mind, but confidence to be in the market and not worry about a market crash or a market correction or retracement or whatever the case may be. And I'm talking about how to properly hedge a stock portfolio. And the ramifications of this are far more than what most professional investors will lead you to believe. It's absolutely phenomenal what a properly hedging your stock market portfolio can do. All right, so I want to just take just a few minutes and discuss that with you for a second. So number one, here we are, we're coming up on the election, and it's going to be an election year. Generally, the market is bullish leading into the election. Now, this is a different year. I think everybody would agree. We really don't know what's going to happen. I mean, there's been some weird stuff happen in the past, and this year there's a lot of unknown. And so I think that there's going to be a little bit more volatility in the market going into the election. And then after the election, who knows? Who knows what will happen? I remember in 2016 when everyone thought, the media thought, the Wall Street thought, everyone thought Hillary Clinton was going to win the election. And I'm watching stocks that night and in the overnight section. And as the votes kept coming in, and slowly but surely the world realized that Donald Trump was going to win the election, all of a sudden stocks tanked. I mean, it was called a flash crash. And the market was down about 35%, if my memory serves me correctly on that. I was watching it. And then by the end of the evening, and by the time you approach the morning, stocks had climbed all the way back up. I mean, there's some serious volatility. And I just remember people like panicking over the stock market dropping so much. I mean, volatility just skyrocketed. It was one time event, but what if the market kept going down? Right? I mean, sure, it bounced back, and it often does, but what if it kept going down? And we might have a similar situation to that this year. And there's a couple of other things that are added to the mix. Like, for example, everybody right now thinks the market's going to go higher. And why? Because they've just dropped rates by 0.5%. And they're expecting, I think the Fed chair came out yesterday, Powell came out yesterday, and said they're expecting rates to drop by another 0.5%, a couple of 0.25% drops over the next 3 months before the year ends. And a lot of expectations were that it was going to drop 0.75% by the end of the year. And so there's a little bit of volatility, but everybody's optimistic. They're looking forward to the market moving higher. They think the market's going to move higher. And man, what a time to hedge. When everyone thinks the market is going to move higher, that's when you want to be hedged. Sure, the market might move higher, but you don't want to be caught on the downside of a surprise and watch the market go drop, your stocks go in the toilet, your account goes in the toilet, and you're going to sit there and you're going to listen to the people on CNBC and Fox Business and whatever investment or financial news network you tend to favor, and they're going to say, oh, well, we're in for the long term, this is a great time to buy, and the stocks always recover. They'll recover eventually. Blah blah blah. And they just downplay it because they don't know how important and how effective hedging can be to not suffering that kind of crash. If you look back in 2001, which, again, I remember this vividly, and we had 9/11 and the markets crash, and before that the market had been making all-time highs at the time, and then the market crashes, and then it spends a couple of years doing nothing, kind of moseying about here and there and wherever, and then slowly going back up to where it was in the late 90s, early 2000s. And then in 2008, market spent all the time getting back up there, and in 2008 you had the housing debacle, and the market crashes, and you're looking at 2012 before it recovers from that one. And so if you look at a chart, if you long-term, and in fact I'll show you this chart in the hedging video, but if you look at a long-term chart, it's like 13 years before the market made new highs. That's insane. You don't need to deal with that. You don't even want to put yourself in that possibility, and I'm afraid that we're getting close to something like that. I think that we are, maybe not now, maybe sometime next year, maybe even the year after. But you don't know, and you don't know, what world events are going to come about that are going to send the market spiraling. I remember doing a hedging webinar similar to what I'm doing right now. In fact, I sent out an email on this. January, before the pandemic, I said, listen, markets look great, but we're only one unexpected world event from a market crash. And sure enough, February, just 1 month later, COVID hits and the markets begin to tumble. And so, we're always in that position. And you don't need to fret. You don't need to worry about it. You don't need to try and figure out, hey, I'm worried about a crash, so I'm going to pull all my money out. I remember a guy in 2012. He was absolutely certain the market was going to crash. Absolutely certain. And so what he does is he pulls all his money out, sticks it in gold, sticks it in this, sticks it in that, whatever. But a lot of it is in cash, and he's not in the market. And of course, the market from 2012, pretty much nonstop from 2012 until the pandemic. It was just ticking higher. And so he got it wrong. He was wrong. So that's the beauty about hedging. I don't have to try and predict when the market is going to crash. I don't have to predict a downturn. I don't have to predict a retracement. I don't have to predict whether the market's going to keep moving up, and if it does keep moving up, by how much, because I'm fully hedged. And if I'm fully hedged, the other benefit to that is that I also can be fully invested. And that's really where you gain an advantage, because you're not over here shrinking to the corner. You're not putting your money into the ground, digging a hole and putting the money into the ground. You're not keeping it in cash, which is nothing but a loss. You are keeping it in the market. And you can do that because you don't care if the market crashes, because you've got a hedge in place, and if the market crashes, you might lose a little bit. You might stay about even, or you might even make money. Right now, I am positioned, not that I think that the market's going to crash, but I am positioned right now with a hedge, so that if the market crashes, I'm going to do really well, like 50%. I'll probably make 50%. If the market crashes 25, 30%, right now, I'll probably make about 50% because of my hedge. And if the market doesn't crash, I'm in, and the market keeps going up, I'm going to participate in it as well. The long-term effect of that, not only on your investment account, but on your peace of mind and your confidence to stay in the market, cannot even be conveyed until you actually experience it. So why am I saying this? I'm saying this because I have another hedging webinar. Now's the time. Markets are at all-time highs. We're coming up to an election. Who knows what's going to happen? The confidence in the market is really high because of the lowering the interest rates. And man, I'm telling you, it's just prime for a surprise. And if I'm wrong, I'm wrong. But if I'm right and you're not hedged, that's going to be pretty big. So I'm going to strongly suggest that you go ahead and sign up for my hedging webinar. Actually, you're going to get a video, and it's going to talk about the importance of hedging. It's going to talk about all the different ways that everybody else talks about hedging, but they really don't know. Hey, this is what you want to do. If you're concerned about a market crash, this is what you want to do. I list about 5 or 6 things that are pretty common that you don't want to do. But everybody else will tell you this is what you want to do. So I go in there and I explain to you why you don't want to do it. And then I talk about the only true effective hedge, the drawbacks to it, the pros, the cons, and also how to deal with it. And so there's nothing that I don't cover. And then every month I say, okay, this is where I'm hedged. I show you my exact hedge position. This is what I'm in. This is why I'm in it. This is how I'm helping defer the costs of it, et cetera, et cetera, et cetera. And so you get live, ongoing updates on hedging webinars available to you. So go ahead and sign up for the next one. You'll get the instructional video on hedging, and you'll also get access to the next webinar. And you can stay in the market, fully invested, fully hedged, peace of mind, knowing that no matter what happens, you're not going to suffer through a crash. I look forward to seeing you on the next webinar.